This next episode is going to be an episode that I was recorded about 2 years ago. It's interviewing the Duboe twins. They were born in Argentina. They came to America at a very young age. They in the Las Vegas, and they are the founders of Harmony Home Loans LLC, and they touch on a lot about purchase and refinancing and helping day-to-day consumers and clients to be able to obtain home loans that are going to be suitable for them. They break down the multiple areas where people can easily qualify for loans, regardless of credit score and many other factors that a day-to-day consumer might think it's an important point, but they just break down each specific point as well. So again, the reason I'm recording this, I just want to just rehash that this episode was actually done about 2 years ago, where we retrieved all those files and the data of the very first episodes that we recorded, and this is the one with the Duboe twins. So enjoy it. Today we have one of our first few guests, the CEOs and owners of, is it Harmony Home Loans, right?
Correct.
Entrepreneurs for mortgage and home loans in the industry of Las Vegas. The nickname is called the Bank Brothers. We're super excited to actually have them today with us. So guys, thank you very much for joining us today. I appreciate that. All right. I heard you guys were born in Argentina.
Absolutely. Yeah.
You guys are not, by any chance, Messi fans?
That's a tough call. I mean, we just won the World Cup, so we're more into Messi fans. Yeah.
What if I told you Ronaldo is the GOAT?
I don't think he has a World Cup.
He's got Saudi Arabia money, baby. Arab money. Awesome, guys. Can you guys tell me a bit more about like Banking Brothers, like where you guys come from, how you guys started this business, and how it came about as well?
Yeah, so Banking Brothers, I mean, obviously, we're brothers, twin brothers, identical. And more than that, we've been working together pretty much almost every single job since we started. So we always were together. And just in the last 7 years, I started in the mortgage industry. Kevin actually started in the real estate industry before me. Yeah, we both dropped out of college and ended up going into the space of real estate and mortgage. And just recently, with starting my own company with my business partner, we really sat down and we're like, we could do this and really make a brand for ourselves. I think the first people you think of as far as in the real estate field that's twins are like the Property Brothers. And we decided to like, hey, we could do this too. And in the mortgage space, there's not something like that. So it's something very unique. And we're young entrepreneurs. We're ready to take that and market to everyone. So that's kind of how it came about. It's in its early stages, but so far, really good feedback on it, and I'm excited to see where it goes. Yeah, I think it'll be a great like marketing tool, and then also just something that makes us very unique because we both are in the same industry and can provide a lot of value being together versus like just working separately.
And you guys started this in Las Vegas, right?
Yeah.
Is this the first branch?
Yeah, so for Harmony Home Loans, we started the LLC 2020 during COVID. We left a different company at that time, and the process was about a 2-year process to fully be operational and licensed, and we're self-funded. So, we need to have all the capital to have all the bank lines, the licensing. We're licensed in 5 states right now, but this is where our headquarters is at. And so Vegas is our home and where we have started our office down the street over here. And yeah, now this is where we're going to start growing it and expanding it.
All right. Have you guys entered, or is the plan to try and expand to like other states like California or New York, or is that like the trajectory that you guys have in line for that?
Yeah, for sure. So we're going to be, we're already, like you said, in 5 different states. We have a branch in Dallas, Texas already. And by the end of the year, I think we're going to be able to have 20 more licenses. Yeah, so we really are going to take it like fully nationwide and, go as big as we can. Yeah, our next stop is Florida right now. So in March of next month, we're looking for a new branch and loan officers at that place right now. So we can expand our footprint in Florida specifically and start expanding there. So, but yeah, we're looking to be nationwide 100%.
Awesome stuff. And how do you guys like stay up to date with like the changes in the trend? Because I know with the real estate market recently, um, it's just been getting more and more expensive for like homes. People have been saying that 2008 is going to be occurring again. Do you guys like plan to try and have like a specific plan for those trends and those changes occurring in the late future?
Yeah, most definitely. So, well, one, like keeping up to date with like what's happening. We're always going to be in contact with other people in the space that are like professionals and like very successful business people in order to make sure we're staying ahead of the curve with like technology and things like that. But really to counteract like what's going to be happening in this type of market is the technology that we have. In addition to that, we're always going to be working creatively to find different options, and also just like educating the consumer, because a lot of times a lot of the consumers are getting educated through the news channels, which is not always going to be accurate, and they're going to have misinformation a lot of the time. So it's our responsibility to educate the consumers with what different options they have and really make it a reality for them to own a home, because right now it's actually a great time to purchase a home.
So speaking of that, what are the different types of home loans available to borrowers? Are they different? Because the reason I'm asking this, one of my friends also who does solar with me and also leads a team, ended up like buying a duplex, but he spoke about how he ended up like using his name as like the residency to try and get like a, I don't know if it's FH something, I don't know what the name is, to get like a 3%, which was super low. How does that, like, what are the different types of options for like home borrowers?
Yeah, that's a great question. And for your friend, they went to do an FHA loan.
There we go.
More than likely a 3.5%, because that's the minimum down for that. And so I would categorize it to three different categories as far as products available. The first ones is going to be your traditional ones, which are government financing. So your FHA loan, your VA loan, so any veteran that served the military, and they'll have an access to a specific loan type, which is 100% finance, no down payment required, which that's actually a great example of one of my clients in Florida purchasing a fourplex for a property, 100% finance. It's 2.3 million. First home he's going to purchase, and he's buying it for 100% finance, and it's a fourplex for 2.3 million. That's cash flowing already, and that's just something that most people don't know that they have, especially if you're a veteran. So that's one thing as far as like the categories of loans. As far as the government ones, you have your traditional, which is about 65% of the market, which is a traditional conventional loan. And those are the ones that if you have a second home and an investment and even primary, you would have to do a conventional loan.
Okay.
And then the next category, I would say, it's called a non-QM. It's a non-qualified mortgage. So they state that because of how the income we could use to qualify. So this would be like a bank statement program. So if you're a business owner, I just did this today on my video, is that if you're a business owner, tax returns sometimes might not be the route for you to get qualified, because you write off all your income, so you're paying less on taxes. But if that happens, like if you go to any traditional bank, they might just deny you and not get you the loan. When if you work with a brokerage, which that's what we are, we have alternatives. Yeah, we have alternative financing because we work with 25 different plus banks that are very specific to mortgages only. So that gives us the advantage of products that we have available, and like they might be qualified for like a bank statement program. Maybe they have alternative income, another way that we could source it. So there's that. And then the last one is private financing, or hard money financing, it's called a lot. A lot of fix and flip investors use that for like buying a property, rehabbing it, and then selling it after it's completed for a profit. So that depends on the consumer, really, like what you're looking for. You know, if you're going to be first-time home buyer moving into a home with the family, or if you're going to be an investor who's looking to make a profit out of an investment, you know. So then, you know, no Ferrari like that.
Another thing I want to talk a bit about is, did you have something to add after that?
Nah.
So I do solar, and when I sell solar, a very important thing is that a homeowner has to actually qualify for credit. And usually they have to have a minimum credit of about 650 for a credit score as well.
For solar.
Yeah, for solar. And so what happens is that I've come across situations where people end up getting slightly a bit lower, and then they have to get a bit of a higher interest rate through the specific financer as well. Now, why I'm leading to this is, what do you guys do with those customers or people that want to try and get home loans, but their credit score is not sufficient or good enough? Are there like alternative ways you guys try and figure and help them out? Or I know you say you work with about 25 different like mortgage lenders, but like what are ways you can help those that are struggling to get a bad credit score? Or even those that are in bankruptcy, you can touch that. That could be a follow-up question.
Yeah, for sure. So, if they have issues with like credit, a lot of times, again, it comes from like misinformation, because a lot of people think they might need a minimum of like 640 to get qualified. So depending on the loan type that they're looking to get qualified for, let's just use that FHA, for example. FHA, you can actually have as little as a 580 credit score to qualify.
Way.
Yeah, so
But then what's the minimum home you can buy for a 580 credit score?
that really comes into factor like their income.
Okay.
So depending on how much income they have, that will determine really, and also like what type of debts they have will determine like what they qualify for. But technically speaking, a 580 is going to be the minimum needed to qualify with an FHA loan. So a lot of times homeowners might feel discouraged because they don't have a 640, but in reality, they could possibly qualify for an FHA. And then conventional, their minimum is 620 to qualify. VA, which is the other, for military service people, there's technically no credit score required, but banks determine what they're willing and unwilling to accept for that type of loan program. But if there's a situation like you mentioned, like the bankruptcy, those different loan products actually have different guidelines, is what we like to call it, depending on what type of bankruptcy they have. So if it's like a Chapter 13, for example,
I was about to say that.
That one, for a VA and FHA, we have to wait at least a year after they made on-time payments with the bankruptcy. For conventional, that actually takes a little bit longer, but if it's a Chapter 7, that one is the minimum like 2 years out for an FHA and a VA loan.
Okay.
So, there's all these different types of like, buckets that these people can fit in depending on their situation. Yeah, and I think that won't be available information-wise unless they get started on the process.
Okay.
So like most people are afraid to move forward, or they might feel discouraged because they worked with another bank and they told them they're not qualified, when in reality they're not giving them the proper information to actually plan how to get qualified if they can do it today, right now. Because most people that we actually work with, when they want to apply for a loan, they're not all times ready to get qualified and purchase home that day after we're finished. Like they might need to wait a few months. One client had a bankruptcy. We had to wait 6 months out before, he thought he was ready to go, but he wasn't. So, and then as far as credit score in general, we provide solutions for that too, as far as like credit repair. Like we pull their credit report, whether it's a soft pull or a hard pull, because we have both options. We then, if the score is not high enough, we could let them know these are the action steps you could take in order to get the score you would want to receive that loan amount. So we provide those steps alternatively too. We don't want just to leave anyone hanging as far as like, okay, we can't do anything for you right now. Do this, and talk to me later. That's not being service. And, people want to, it's a big decision moving forward on purchasing a home. So again, the big steps to even take those courses of action, we want to make sure they're comfortable moving forward, because they'll remember us when the time does come to actually use our services at that time. Because not everyone is, how often are you like actually looking to purchase a home right away? It's not like an Amazon like drop ship where you're getting this thing next day. This is like a big decision that happens every so often in the course of your lifetime. So you want to make sure you're taking that same action step to provide how serious it is, so then they're ready for it at that time.
Oh, awesome stuff. I would assume, is it a challenging factor when the Federal Reserve keeps increasing interest rates, or how does that like affect like the borrowers, or how does that affect like your company, both? How does it affect the borrower specifically?
No, that's a great question. So, kind of twofold too, is like that's really started happening July of last year. We see these like high increases in interest rates. At the same time, that also plays into factor with like the pricing. We've seen about a 10-15% drop as well, at least in this market, of home prices going down. And that does disqualify a lot of people. So a lot of times that's discouraging for people that were once qualified for like 500,000. Now they can maybe only qualify for like 400,000, which doesn't allow them to purchase. But there's also like alternative programs, like we were mentioning, that allows people to still qualify for like a lower monthly payment. For example, there's a program called like a 2-1 buy down.
Okay.
This is just a program that let's just say you're a consumer and you're wanting to purchase a house, you're asking the seller to pay for this program for you on your behalf. Let's just say it's $10,000.
Okay.
And for the first 2 years, your interest rate's going to be dropped. And for the first year, it's going to be 2% lower. So let's just say you start with the 6%, is what your original rate's going to be. With this program, you're going to start with the 4% for the first year. And then on the second year, it's going to go up to 5. And then on the third year, it's going to go back to 6. So you're saving money within those first 2 years because of those lower interest rates, and it's being paid for by the seller.
Okay.
And really the idea of it is within the next 18 months, we're going to see interest rates drop back down. So you're going to have, as a buyer or an owner of this house, you're going to have an opportunity to refinance it into a lower interest rate that's going to be fixed. And so this is one program that's been very popular. That just allows for a lower monthly payment for consumers to qualify for and still have a low payment, So.
Oh, I love that. I want to make this like a personal for me as well. The reason I'm asking that, we've been renting in California for a while, and Bay Area is crazy expensive.
Oh, yeah.
And so we came to a conclusion. I mean, solar it's been going well, but we came to the conclusion, fine, we're going to try and buy a home for ourselves. Now I want to give an example for me and myself. So when I bought my Tesla, I had a 680 credit score. Don't judge me. Don't judge me, please. I had a 680 credit score. My wife had about, I think, a 750. So I could have bought it obviously with myself, but when I used it as a co-borrower, it actually decreased how much we were paying in terms of percentage-wise as well. Now, why I'm getting to this is there like a minimum requirement somebody would need for a salary if they want to try and purchase a home? Is it like a basic minimum somebody at least needs, or is it just like constant income? How does that work?
So it's more like depends on how much of a loan amount you're looking to qualify for, because like I could say you could make.
Let's say I want a $500,000 house.
Yeah, $500,000
in like Utah
house.
or something like that, example.
Yeah, and that all plays a role into the whole thing because like if you have a home in the Bay Area versus a home in Las Vegas, your property taxes are going to be skyrocketing
100%.
compared to here.
Mhm.
So like that same $500,000 amount it changes because your payment changes. So your income also has to match as far as how much you would make in order to qualify for that specific payment. So that's how it changes. So, especially if you had a co-borrow, someone else is on there. Now we have to consider their debts and also their income to see if it actually helps or doesn't help you,
100%.
So these are all the moving parts that are in the loan process that people don't know about that like plays a role where like I could get you qualified maybe for in Oklahoma where there's no property taxes almost. Home insurance is literally virtually zero. You probably might not want to move over there, but you can get qualified up to $1 million with the same amount of income.
Okay.
Compared to in Vegas or in California now, like now you're only qualified up to 500,000, right? So, you start an application. That's why it's important to just start the process because, and most people are afraid to run their credit when you can actually just do a soft pull and still get these preliminary numbers to give you a game plan of like how much it looks like. Right. So that from there, then you could actually move forward because if you're not equipped with information, then you don't know how to make the decision. So that's all we're trying to do when we're talking to clients, give them the information. We'll guide them in certain cases, but overall, those are the important factors in order to make a decision on that. So.
Sorry. So the reason why my
They're excited.
yeah,
Excited.
clearly. Somebody wants to join the podcast. Come over, bring forth thyself. Anyway, so why my credit was 680 is because when I was in college, I forgot to put an auto payment on my new card for T-Mobile payment, and so so stuff like
small payment.
A small. So I know you spoke about credit repair. In situations like that, I know some people get so fed up where it's like something as small as, I don't know, a friend of mine eventually built his credit score all the way to 700. But what happened, he forgot to pay, like, I think he had like an installment of like $20 for something, but it ended up like having a damaging effect when they pulled up his report. So when you do a credit report, is there a way you can completely remove like those small stuff when somebody pays it off, or how does that work? Do you know a bit?
Yeah, so if it's like, one, like on-time payments is like the biggest factor on your credit score. It's like has the biggest impact. And unfortunately, like what a credit report is, it just reports what's happened. So if there is late payments, like you can't unreverse that if that's actually what happened. But in the cases where like maybe that account went into collections or went into a charge-off type of status, then you have an opportunity to maybe pay that off, or even as a collection, maybe able to remove it. Now that's difficult, but that could help out with like increasing your credit score. But there's a lot of different factors to be able to at least help out with increasing your credit score.
Okay. So technically it won't completely go off, but there's a way for you to kind of replace it. Because I paid it off when I realized what it was, but it's still there. That's what I'm trying to say. Like when I pull it up, it's like
a blemish, you know.
2018, like, you know what I'm saying? It's like, can you not remove that? They're like, no, it's there. I'm like, I'd love to pay it like 100 and something just to get that like taken care of, but there's no way to get rid of it, right?
Yeah, if there's like late payments, then no. But it will after 7 years. Then it won't report anymore. So eventually that stuff is going to come off. It's just going to take some time.
And I would assume that having something as small as a T-Mobile is better than having like a mortgage that you didn't pay off, right?
Yeah, exactly. So the different type of accounts is actually what's another factor that comes into like what your credit score is. So if you're late on an auto loan, it's different than being late on a credit card.
100%.
You know, this has way more of an impact. Same with like a mortgage. You know, if you're late on your mortgage, that's going to have a much more worse effect on your credit score versus just being late on a credit card.
I wanted to get your guys' thoughts. I've been doing a lot of studying on Airbnb, but I've also been doing a lot of study on Airbnb arbitrage.
Yeah.
Because when we want to get our home eventually by the end of the year, we wanted to try and potentially either rent for starters for arbitrage in like an area where people will attract the market, like a California. I would never do an arbitrage in Idaho. Who's going to go to Idaho for number one? I mean, I love Idaho. I school there, BYU, Idaho. But I'm trying to say, like in a market, what's your thoughts on Airbnb and arbitrage? What are you guys' thoughts on that?
So, I mean, with Airbnb, like obviously there's a lot of money in a lot of places that you can make.
Do you guys own any Airbnbs?
We don't own Airbnbs. I've worked with some people that like they want like financing at certain points. Obviously, with the arbitrage, it's different. Yeah, they're not financing the property unless they are looking to own it. But you know, those are short-term rentals, which actually the mortgage industry is still catching up to being able to use short-term rental as income, and it's been very popular. Obviously, the last few years, that's a big source of income for a lot of people. And so, you know, when we're actually helping someone to qualify, I think you got a client that he was a veteran. He actually purchased his property. Yeah, he does a lot of short-term rentals. He doesn't do arbitrage, even though, like, in my opinion, arbitrage is, I think it's a great way to start.
Yeah.
Because if you don't have any money, nothing like that, it's a great way to, like, you're still taking on a risk, of course, by doing it because you're still going to be obligated on that lease. But it is a way to still put your foot in the door of at least real estate investing. And I have seen people with success in it. So I would just say do your research, and then if you can find someone that has maybe a program that specifically is about like arbitrage, then maybe do that first before just going out there and risking yourself paying a lease. You know.
I would actually agree 100% with that. There's a lot of fake gurus on social media today, and I've seen people get like ripped off, and like it's like, why are people doing that? Because they don't do enough research. They get super excited by like a certain reel that doesn't even seem as legit, you know. And
that's part of like this like generation is like anybody can like I can go on, make a bunch of videos, act like I know what I'm talking about, use maybe some chat GPT,
rent a car.
right, make it sound like I'm smart, and then like you know you can like get people to buy your product, and it's like you have no experience though. So that's a lot of that's out there. That's also where we try to surround ourselves with people who are successful in that regard, just with experience and business that are not just like fakes. Yeah. So
now that's I couldn't agree more. And leading on to that, actually, how has technology impacted your work? In the sense, I don't think you guys saw, or you probably have, Instagram recently released a new thing they're going to be doing to try and verify accounts. I often think there's going to be a lot of pros and cons to that, because now the fakes will now get like a blue tick as well. Yeah. But getting back to that, how has technology like impacted you guys as working in home loan and mortgage industry?
Yeah, well, honestly, tremendously. There's a few points of technology. With number one, I think the hot topic right now is AI, which is like how you actually use AI. You have ChatGPT. You know, right now, like it can create your email campaign. So as far as for a sales and marketing standpoint, like that's we're getting a lot of execution done faster before we have to outsource or at least get someone to do some of these things. And as far as the marketing or editing or even prompts and getting these Word docs that we needed, now getting in the tip of our fingertips and like getting it now, now we could start executing more on content as far as for ourselves and our loan officers as well in our team. And then on top of that, like our brand that we like to have for Harmony Home with the speed, technology, and service. And with technology, like we have our own operations inside internally to provide a better consumer experience throughout the whole process. Online, as far as application goes, very smooth, user friendly. That's not something that was used beforehand. A lot of times when I got started in the industry, it would be over the phone application, and you'd have to either write it down or put it on an email. That's also changed down to like online application forms, but even the whole experience down to our partners and our real estate agents that work with us, they're also getting included in the technology and using it in order to provide a better experience not only for themselves but their clients. Because as long as the client experience is managed well and like they're actually getting something out of it, whether it's how fast we close or the speed of getting the approval or getting answered quick back to us, and like anything available, lower cost. All that does is like we now can be more competitive and be in the market and compete with the big banks, because now we're able to offer lower interest rates, lower costs, and we give that back to the consumer because of the technology. Technology allows us to do that and be able to deliver on a faster experience, which then turns into better client experience and then gives us more referrals or deals for the partnerships for the agents. And so I would say technology is probably the biggest thing that has affected us, especially in the last 2 years. With AI now, I can't even tell you where we're going to go.
What I did as well, I had a friend of mine who was trying to like do research for something, and he showed me like ChatGPT, and he typed something out. I'm like, what is going on?
Yeah, it's crazy, right?
And I think I saw like a few trends where it was actually like retaliating to people, like I don't know if you guys saw that, it's been, and Elon Musk's like, oh, you guys need to stop this thing as soon as possible kind of thing. So I think as we grow more with technology, there's going to be a lot of like cons as well, not just pros. Do you guys agree with that?
Yeah, I think on the AI side, for sure, we don't really know where that's going to lead us to. But as of right now, we're just trying to take advantage of like the technology and
100%.
how it can benefit like us and also like the consumer, because like Ian was saying, is like it's allowed us to like execute at a much faster level already. And with the technology that we have in our system, in our company, it makes the experience a lot better for the consumer, because our industry is like very outdated.
Yeah.
You know, mortgage industry, real estate industry, it's one of the last industries to probably get updated. You know, we're going to slowly start seeing more like crypto into like the market as well, where there's like crypto mortgages coming out soon, and there's been one already that has come out, but it's a very outdated industry. You know, the average loan officer is 52 years old.
Wow. That's crazy. Before we go into how people can get in contact with you guys, I want to just like make a real day like example. Like let's say I'm coming now as a client. Like it's my first time. I saw a home in Henderson going for $450,000. Like how do you walk me through the various steps? Like I'm coming to you, I want to buy this house, like, and I have let's say a 625 credit score. Like what are the first steps we're going to go through with that?
Yeah. So I mean, the first step is going to be completing the application. Honestly. That's just an information that I'm going to need in order to get you a pre-approval letter, because that's the next step that we're trying to accomplish, is getting you an actual pre-approval letter, letting you know how much you qualify for. So typically we just sit down and have a conversation, whether it's over the phone, in person, and I really just ask you what you're trying to accomplish. I'll see if you're looking to accomplish, hey, I found this home, $450,000, I want it now. Okay, perfect. Fill out this application or just give me the information over the phone. So I'm going to ask you about your 2-year work history. As far as the last 2 years, where have you worked?
You need bank statements, you need like pay stubs and stuff?
Yeah, and that's once I get the information, I know as far as like your history of your work, your history of the last 2 years of your where you've rented, unless you owned, and then also just in general, how much assets you have. Once I collect all that information, then I'm going to ask you, okay, now let's support that with documentation and prove it. Okay, so driver's license, social security card, bank statements, or wherever the money is sitting at, like, okay, we're going to get those statements, pay stubs for the last 30 days, and any additional documents standing on your scenario. Once we receive that, we review it all, we get you back a pre-approval letter, let you know how much you qualify for or not. and if we can meet the limit to the $450,000 purchase. If it all works out, great. Give you a pre-approval right off the bat. That's what you use to go out shopping. That's what you use to submit offers to the sellers with a real estate agent, and that's where you use. So once you you negotiate the deal, perfect. You have a contract now. You're officially in contract to purchase that home. You put in your earnest slide deposit, was just a holding aid, a holding of you moving forward on that contract, and we schedule closing. At that point, we start the process with your agent. Typically, we're closing 21 days or less.
That's quick. Less than a month.
Yeah.
Is that the average?
Average like for the industry is like 30 days, maybe a little bit longer. But with us is like working as a broker, we can do 21 days or less typically. And this also involves like the technology aspect of it. Like we're heavy in investing in technology, the service, the client experience. And so like, we had one this year, we closed the loan in 12 days. That's a home purchase. Like that's usually not unheard of and that quick, but if we're doing our due diligence up front, as far as obtaining your documents, obtaining information, and we're equipped with information ourselves on how to qualify you for, you might not have an experienced loan officer you might be working with, or they might be working at a retail bank that they might not have the actual tools or resources to qualify you correctly at that fastest pace to close on your transaction. But yeah, so we'll close that part. You do typical inspections, appraisal. We verify all the income again and with employment, submit everything to the underwriter to get a final clear to close. After that happens, we schedule closing. You sign your final documents and we'll fund the loan. And shortly after, your property records into your name and you get your keys in.
Wow. Thank you. That you really elaborated and explained that in depth. I really appreciate that. Last two questions I have for you guys. I really appreciate your time yet again. Number one, I want to know what has made you guys so successful at like such a rapid pace, because the trajectory just seems to be heading this way, like how you guys outlined like the blueprint, how you guys started off. What makes a successful entrepreneur? Like how can somebody like follow the same path you did, even if it's not like in that field, but any specific field? What makes a successful entrepreneur?
Yeah, I would say we have a saying in our office that's posted on our wall. It says never quit, because I didn't get a formal education. I dropped out, and I was actually going for school for entrepreneurship. So fun to say that it really just comes down to never quitting on your actual goals, because I never was expected to own a mortgage company. I didn't know I wanted to own a mortgage company. I didn't think I was going to own a mortgage company. But now I'm in this now as a full entrepreneur. Obviously making money, had employees, making an impact, talking to you, talking to people, meeting, networking. And that was never an actual thought that I thought I could do. And in entrepreneurship, I just fell in love with it, honestly, because it's so challenging. There's so many failures, number one, and you're going to come across those obstacles time and time again. And my motto was just never quit. Because if you never quit, then you don't lose. And whether you're at zero, whether you're at 10 million, whatever it may be, like you continue moving forward, because you just don't quit. And like that's been my motto overall in regards to entrepreneurship in general. Obviously, you want to surround yourself with great people. I think that's like a shortcut that I didn't have, is like I didn't have mentors. So I failed myself and cost me time, energy, and resources. But I would say if anything, if you could do, find someone that's in your space, because there are people out there willing to provide you and give you those road steps, as long as you're willing to work for it.
100%, which goes with one of my favorite saying, your net worth is your network, or your network is your net worth. The more you end up like just engaging with people, getting to find out about them, eventually you're surrounding yourself with the 5 people, which are the average of what you're going to be eventually as well. And then just for our viewers as well, how can people come in contact with you? Like what are your social media platforms, like Instagram, Facebook, Twitter, YouTube? What are ways people can get in contact with you guys?
Yeah, most definitely. So we have our Instagram account together, the Banking Brothers on Instagram.
I like your reels, by the way.
We try to make it, funny, entertaining, and educational. So.
The last time I saw twins that funny was the Hodge twins. I don't know if you guys follow those guys.
They went to. Oh no, they didn't go to school here. But yeah, I know the other thing about they're hilarious, honestly. But at the Banking Brothers, and for myself, at Kevin Duboe, and for him too. And so mine's at Ian Duboe, and that's all platforms. So the Banking Brothers, you'll find us together doing our content. So
awesome stuff.
Yeah.
Actually, one last thing. You guys have a chance to redeem yourself right now. Who is the GOAT Of football. I mean, I know earlier we gave a wrong answer, but this is the last chance before we conclude. Like, who's the GOAT of football? Like, and I speak about soccer football.
Honestly, AJ is very butthurt about his loss. Aus bei Ronaldo not doing But we know the best. And I mean, I love them too, but we know the best.
All right, guys. Thank you so much for your
thank
time.
you.
I really do
Thank you, man.
appreciate that. Thank you very much.